Good morning, and welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, lead oil analyst here at Stratas Advisors. In the week since our last edition, Brent prices rose by $1.55 a barrel. For the upcoming week, we expect Brent prices to average $68.50 a barrel. Geopolitics will be a neutral factor in the week ahead, with minimal news on the horizon that is likely to influence prices. While perennial issues remain, we do not expect them to become more impactful in the short term. The dollar will be a neutral factor in the week ahead as fundamental and sentiment-related drivers continue to have more impact on crude oil prices. The dollar will continue to be impacted by news around recently enacted trade tariffs. Trader sentiment will remain a supportive factor for crude oil prices in the week ahead. ICE Brent and NYMEX WTI managed money net positioning both rose last week. Supply will be a negative factor in the week ahead as U.S. production continues to increase. Evidence of renewed global oversupply continues to pose the greatest threat to prices. In a spot of good news, the Dallas Federal Reserve released further evidence that service costs for U.S. operators are indeed rising, potentially slowing the rate of U.S. production growth. Demand remains a positive factor and is generally strong. U.S. consumption of petroleum products remains generally at or above seasonal averages in all products. Refining remains a neutral factor for prices this week. Margins rose in almost every enclave last week despite higher crude prices. Brent cracking in Rotterdam increased $2.32 a barrel, while Euros cracking in the Mediterranean increased 97 cents a barrel, despite Brent rising more than $1 last week.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.